Hey traders, what's going on? Jamie Saettele here. It is February 3rd, 2022, and we've got a lot to get to, so let's do it. We are going to start. We're going to start with US dollar, DXY, pardon me. So we had, and I wrote this last night in my note last night, that squeeze rally we had last week, right? It just smells like bull trap. I mean, that little poke above. I mean, again, we have this long-term trend line, 2011, 2014, right? The underside of that, again, was resistance for the breakdown. And, late 2020, early 2021, sentiment was everyone hated dollars. Now everyone loves dollars. We nailed that thing back in November. We nailed it again last week. And look at this, straight down. Okay. So actually, as I am sitting here speaking, post BOE and ECB, we are actually starting to crack this trend line here. So an important move here today is DXY is breaking down. And if we flip it upside down, we get euro. And again, you guys are all familiar with this chart, right? Trend line back to 2014, trend line back to 2018. We talked about last week what we call weekly reversal support, which again is the low week move and the close of that week, which right here was in March 2020. That was 1132. We said that is support. Guess what? We have retraced all of last week's decline and more. So yeah, euro looks like it's on its way. Look, from here, let's see how we close today. Let's see how we close this week, tomorrow. But, assuming that we stay firm, I would look at this 1380, level as key support. Like that was big resistance back in November. It was big resistance at the very end of 2021. And you would look for that, to provide support now. So again, breaking the trend line, 1380, probably decent support, at least a level to pay attention to. I don't think you want to trade much below that. Otherwise, this whole thing's in question. Again, like when we broke out, here in very early January, I thought that 1380 was going to be support, and it was not. And when we went through it, we fell apart. So, keep it simple here. If you just look to the left, where were the highs? Where was resistance? 1380s, 1350s. That's a very good zone to pay attention to. Right? Dollar Swedish krona, which is always kind of the bellwether, if you will, for the dollar in general, notably for European FX. But the rally that we had last week, we did not quite get to that 618 retrace of the decline from the March 2020 high, but we did tag the high from June 2020, and again, coming off. So, hitting a huge level and reversing hard. The one problem with being a dollar bear, I guess, prior to this week was the fact that dollar SEK was ripping, and it's always kind of looked at, like I said, as a bellwether or a leader, if you will. So we finally got that spike or that trap in the dollar. Euro finally made the low, DXY made the high. And maybe now things can resolve themselves with what I think is happening, which is a dollar downtrend, a broader dollar downtrend, right? Before we move on to other cross pairs here, I actually want to take a look at and show you. So you're probably familiar with some of my volume studies, but these are actually the ETFs. Currency ETFs. This is FXE. And again, these are terrible vehicles to trade, right? Trade spot. Currency ETFs are total inefficient, use of capital. So trade spot, but they are useful for analysis, in my opinion. And you can see the blue bars and the one red bar we have here. These are what I call 2-bar reversals. So 2-bar volume reversals. So like the idea is you get a huge rally on big volume, right? And then the next week or day, whatever period it is you're looking at, you get a move in the opposite direction on huge volume as well, right? At least as big as the prior week. And I usually like to see at least like 1.5 times the average volume. So for a week, it'd be like 13-week average volume. For a daily chart, it'd be like 20-day average volume. For a monthly chart, and we'll look at this for indices in a little bit, it'd be 12-month average volume. So this is a weekly chart. And again, the week's not over, but we already have the volume in place to call this a weekly volume reversal. So we are getting that this week. And you can look and see the parameters for this is that trading at, say, like a 50-week low, so like basically a 1-year low, you get the big volume down, big volume up, or if it's a top, big volume up, and then big volume down. And you can see we actually had one here in October, and that would have been a failed or false signal. But we're getting one this week. We had one at the low back in March 2020. We did have one back in Jan 2015, which again was early, premature, because you had that final stab lower. But we also had one in 2010, May 2010. That would have worked out. And you had a top warning actually back in March of 2008, right, which would have worked out fairly well. So this is FXC. Again, that is the currency ETF. If I look at, say, UUP, right, which is basically the DXY ETF, so we can look at something similar and get signals for this, okay? So again, we're getting the sell signal here, or the sell warning, top warning. We had one in March 2020. We had the bottoms here. I mean, you can see it for yourself, right? Top here. This would not have worked out back in 2014, but low back here 2011, lows back in 2009. So we are getting important, information, volume, high volume, an emotional market, suggesting that we have a change in behavior, as I like to call it, in the market. So I would just kind of keep that in mind, right, as we move forward. All right, let's go back to our regular scheduled programming. All right, so dollar yen. A little bewildered, frankly, by dollar yen, over the last, I don't know, month or so. Typically, and again, like you can never just fit everything in a box. But typically, I've been trading for almost 20 years, but like typically you have, dollar yen as a risk off type deal, right? We had just had, equities got murdered. Dollar yen is holding up just fine. Even today, right? On a very short-term basis, but like, S&Ps, Qs, things were down pretty good. Dollar yen is actually ripping. So here we are, the long-term chart or longer-term chart channel from the March 2020 low, right? Resistance, we started hitting it in October, went through in November, failed, went through again at the end of the year, failed. We talked about it in the first webinar of 2022, the Power Hour. We talked about these square root progressions and the top warning, and we actually did top and we sold off, but not nearly as much as I thought we would. If I zoom in now to, say, an hourly chart, my thinking, and I put that in quotes, is that we do have an impulse or a 5-wave move to the downside, and that we should find resistance possibly around 115 or so. Although I'll admit the rally from the low here is not looking corrective at this point. So again, dollar yen, a little confusing to me. I guess if you look at yields, it shouldn't be. But again, it's a different market environment than most of us are used to in terms of risk on, risk off. Like it's not that clean or that, that simple, right? You have yields rallying, bonds down, equities down, and dollar yen is holding up very well. So just a different environment. But anyway, 115, pay attention to that. If you find a resistance there, maybe there's a short, but for now, not that clear to me. All right, let's go to Aussie. So Aussie, seriously, the best way to look at Aussie right now is just the just straight horizontals. I mean, that 69.90, 70 level, let's call it that, is huge, right? Like, look to the left of the chart. How many big turns have you had around that 70 figure? Right here, Jan 2020. Obviously, this was the election, November 2020. Hit that level in early December. Hit that level here, just a couple days ago. And we actually also had, I'm going to bring up a post from, this was January 31st. So we had a daily volume reversal on Australian dollar futures, okay? You can see here, I've got them all highlighted. Again, if you read the post, then you already have this, but a pretty timely signal and potentially a very significant turn. Kiwi. Top side of the trend line back to 2017, 2018 highs. Bottomed on that just last week, turning higher. Also, the decline from basically a year ago, February of last year, if you subdivide it with the high from October 2021, you get two equal legs at 65.59. All right. And from an Elliott perspective, and it really doesn't matter all that much, this is kind of semantics, but like you've got 3 waves down, 3 waves up, and 3 waves down. So that would be maybe what some people call a double 3. It's a complex correction, right? It would be labeled, ABC, 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 and it would be labeled WXY. Again, all that is details. It doesn't really matter a whole lot. Point is, it's all corrective. It's all overlapping, and it's complex. So idea being that you can count it as completed. So if you can count it, it may have turned. And we have the measurement in place. We've got just decent support from that standpoint and from horizontals, right? Big support back here where we took off after, late 2020. And yeah, like Kiwi higher. Big levels to pay attention to, pretty clear, 67 and 68.60 is the really big level. Dollar CAD, I like this lower, and I have liked it lower for a while, but it's not as clean as like, Kiwi in terms of a measurement or a pattern standpoint. We do have this long-term fork that we've been paying attention to. And again, that parallel, which was big resistance back in 2020, did serve as resistance in late 2021, right? Didn't quite get there last week. That doesn't really matter, but you're also still held up by the trend line back to the June low. So your big spot here, and again, if we're trading like short-term ranges, look lower until say like 125, 125.20, 125.30. But in order to have, the next big move or the next big swing lower, you probably need to crack this trend line. That would be the signal for me, or the trigger for me. Okay, one cross that we're going to look at. So I'm very focused on just dollar right now, what's going on there. But one cross that is interesting to me is Euro Yen, which is through the roof today. I'd posted a chart earlier on Twitter, was like, Euro yen, kind of thinking resistance, right? Hasn't responded at all. We are absolutely through the moon here. So trying to crack this trend line too. From a long-term perspective, I thought that euro yen would trade off a little bit more. One, underside of this trend line, failed it again back in October, came off. I was kind of looking down towards the top side of this level, which would intersect with that November 2020 low down near 121 and change. That hasn't happened. Doesn't mean it can't. But point being, on a long-term basis, this thing's pretty coiled up, right? Like, again, this is a weekly chart, but if you just look from the 2012 low, you've got pretty solid, contracting price pattern. We'd call that a triangle. And yeah, the potential for just a bigger surprise move in either direction is there, right? And forget narratives, forget what you think, like the whole Russian thing, blah, 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 bad for Europe, so be it. Yeah, look what Euro's doing today. It's ripping. So, if you look at it from this standpoint, we have broken out of a massive contracting, level. And again, not to say we can't retest this. That's where my, kind of base case is that we come back to, 121, 122. However, if you're waiting for that and it doesn't happen, you might miss a gigantic burst to the upside. So just something to keep in mind as far as euro yen's concerned. And again, the big level here is probably like 134 and change, which is where the high was back in June. Aside from being the 618 retrace of that decline from 2014, it's also 2 legs up, right, from the May 2020 low. So you've got a confluence there, a measurement confluence. So it's not a surprise we topped there, but again, if we go through it, watch out. All right, let's look at, before we get into indices and maybe some metals, let's take a peek at some crypto. I know that you guys love that. So we came into the year pretty bearish on crypto, and we've sold off pretty hard. Look, things got pretty dour from a sentiment standpoint. Obviously, risk assets, not just crypto, but like equities and everything else. So we have bounced, but look, in the grand scheme of things, this isn't much of a bounce, right? I still think the bigger support for Bitcoin in terms of like a position is not until at least 25,000, and that's a couple things. One, it's the parallel here, which we've talked about this, but in median line analysis, channel analysis, you have symmetry. The line up here, 75 line, was resistance. The line equidistant from the center line, you would expect to provide support, again, as per symmetry, and that is close to 25,000, which is VWAP from the March 2020 low. The next level, of course, is just the old high here at about 20,000. We'll call it 20,000. So, from here, I don't see a whole lot to do, right? 25,000, 20,000, big levels. Resistance, if we do rip, is going to be like 47.5, 48,000, right? Now, Ethereum is one to pay attention to. To me, this is a pretty clean chart. I'm actually going to zoom into a 4-hour chart. So former low here is 29.26. 2022 VWAP, which is this magenta line here, is right at that level. So that's the bottom of the zone. The top of the zone is this trend line here, and that's going to be 3,100 or so. And in the middle of that zone, like right in the middle, is VWAP from the high back in May of last year. And you can see that level's been significant, right? Resistance, breakout, support, support, support back in mid-January. Once we broke it, good night. So if we get back to that level, I'd be a seller. Again, if conditions were right, but that's kind of what I'm thinking. All right, let's take a look at some indices real quick. So actually, before we look at these charts, I'm going to bring up that post from the 31st. Okay, so we talked about some of the volume reversal stuff, right? All right, so if you can see these red and blue bars, these are monthly volume reversals, right? This is big picture stuff. So we had a big monthly reversal in SPY in January. Look at some of the other ones we've had. Last time we had anything like this was actually back in 2007, right? Now again, this is not like a timely, short-term signal like where you're looking to, oh, I saw it, I'm going to go short. Like we didn't top until 3 months later, right? In October. Buy signal back here in 2002. We had top warnings back in 97, 98, which would not have worked out, by the way. QQQ. We got a volume reversal last month in January. Last bearish one we had was actually here at the top of the, before the tech implosion in the early 2000s. But again, even here, 1, 2, 3, 4, 5 months, we levitated sideways to higher before we got resolution to the downside. And this is important for several reasons. Here's the Dow ETF Diamonds DIA, right? Volume reversal last month, volume reversal 2018, volume reversal, in early 2007. I think it was maybe June, July 2007. Bottom signal 2002. So you have all these monthly volume warnings. Yet, guess what? We also had weekly bottom signals. So again, if you read the posts, then you will see all these things, and they're all written about and everything. So like where my head's at with this is that, all right, we had weekly bottoms, capitulation on the downside, but we have bigger picture monthly top warnings, if you will. It would make total sense to me if we end up trading, in a volatile sideways to slightly higher, kind of market for the next, several months before we get a directional move. I'm not going to pretend that I know that it's lower or higher. I don't know. But my point is we just had a very volatile period. We had VIX above 30. Market typically quiets down after that, right? So, needs to get boring again and kind of screw everybody on both sides if we're going to actually have a bigger top. So something to keep in mind. And after that, I will leave you with, again, this long-term S&P picture, which is this beautiful channel that we topped at. And frankly, you look at it from this perspective, we actually didn't even get to massive support yet, right? The bigger support is probably down here, somewhere closer to like, let's call it 4,000 S&Ps. So, I don't know, something to keep in mind there. All right, well, for me, that's about it. Again, a very interesting and fun start to the year trading-wise with the volatility that we've had. Love Euro on the upside, especially, again, if we do hold these levels through the week. And the biggest thing I would be paying attention to is that 1350.80 zone in terms of support to really launch this thing higher. I mean, you look at this, we're breaking out, right? So that, and combined with the volume reversals that we've got on those currency ETFs, that's good information. So I don't think there's a lot of Euro bulls out there. It doesn't make a whole lot of sense if you think about it, which, sometimes those make the best trades. Price will lead, right? The stories and the narratives will come out later. All righty. So that's it for me. Again, Jamie Saettele here for the FX Power Hour on Feb 3rd, 2022 for Scandinavian Capital Markets and SB Trade Desk. and take care and have a great rest of your week. All right, bye.